Well, hello everybody, welcome back to another edition of the Forex Weekly Forecast. My name is, of course, Alexander Nikitin. I didn't change it yet. And today we are going to talk about support and resistance levels. And first of all, I will explain you some major principles of identifying the support and resistance. What is support and resistance? There are some levels in the market when price is changing its direction. For example, the market was bullish, then all of a sudden people decided then it should be bearish and everybody began to sell. So this turning point is called a resistance level because it is holding the price of going higher. So using the same analogy, if the price is going to the downside, yes, something happens and all of a sudden people or those market makers or some other traders, in case of Forex they are usually huge institutions, governments, banks, just decided to start buying from here. And this is appeared to be a turning point where the market changed its direction, and if the price had some problems going lower, this is called a support level. It is supporting it higher and higher and higher, and this is resistance. This it resists of price going higher. It is pushing it lower. Okay, so there are many turning points in the market. There are very many turning points in the market. If you go deep enough into history and place your horizontal line at whatever turning point was happened there, you will have it like this, because whatever line you draw, if you go back enough, deep enough into history, you will find at least one line coinciding, at least one time price changing its direction of this line. So how can you choose of whatever support and whatever resistance is relevant and whatever is not relevant? To do that, you first need to think of principles, and I will enumerate these principles and we will discuss it today. The first principle is that the market has a short memory. So what was a support level or resistance level very deep into history means almost nothing today. You cannot rely on this level because that happened very long ago. But what was the recent level, for example, like that, just a few days ago or something like that, it was the recent level when price changed its direction, is a better level. It is a stronger level, it is a more reliable level. So this is the main principle, the most recent level. Recent means time. If you count bars, boom, 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 it is the price turning its direction at the same level as less bars as possible. Okay, so the less bars you have is better. If you have thousands of bars between these points, it may mean nothing. Okay, so what are the features of these levels? The first and the most important feature is that the market is most likely will bounce off this level. If it bounced once, yes, and then you have price coming to this level, we have more than 60% probability that price will bounce off this level again. More than 60%, always almost 70. My research shows depending on the market, it shows 62 to 67% probability that if price bounced off this level once, it will bounce the second time, and the third, the fourth, it doesn't really matter, before it violates. What I mean saying violate, it means we have a higher high and higher close above these highs. So you need to remember that. And what indeed is this? Bouncing of the same level, bouncing again, bouncing again. It is what is called a consolidation period. Boom and boom. Just channel trading, something like that. And as you know, you maybe heard it from somewhere that price is about 70% of time consolidating, and it is only 30% of time of trending. So it means that we have 70% of 70% probability of price to consolidate within these levels, and only 30% probability that we will break either of the sides. So the trend is only 30% probability, 30% of time it happens. Most likely we will have it bounce, 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 bounce again and again and again. Okay, so what is next? Let me show you the next thing. When price finally violated some level, first it bounced off that level, and then it violated some level, and after that we have a price came back to this level. We will most likely what do? Will we break this level? We will most likely bounce off this level, like this. You have seen it many times. Price is turning, bouncing, then it is violating, then it comes back and bounce again. So what do we have? We have bounce number 1, bounce number 2, and only one violation. Only this single setup shows at least 66% probabilities that the price will bounce off this level before it breaks. About 66% probability. Only this setup. It means 2/3 of time price is bouncing, and only 1/3 price is violating. And this is in a trending market. This is the example of a trending market. We have some high retracement, higher high retracement, and bounce again. This is a trending market. And just imagine that we most likely we have more probable the consolidating market. It is even more than that, So that's true that price will most likely bounce off this level than to break it. Most of the time it is bouncing when price is approaching to this level. Okay, how can you choose what level price will bounce? How can you choose between the reliable levels and not reliable levels? Okay, what you need to do, you need to look at the size of the bounce, the size of the pullback. If the size is big enough as compared to to previous, yes, or the same as typical correction, average correction, the same of that, then the level is reliable enough. If the bounce is very small, something like that, and then like that, so this is nothing. This means nothing, because I did it wrong. I draw it on the same level. Needed to draw it somewhere else. For example, here. Boom. Here. Somewhere here. If you compare it, it is not even half. Not even 1/3, 1/4 of that 1, 2, 3 of that typical size of the average size. So this is the measurement. And of course, if you know my swing identification technique, we need to have a zigzagging structure. For a correction to be valid, for a corrective swing to be valid, we need to have a zigzagging structure. What zigzagging structure means, you know from my swing identification technique video. it is the structure we have when we unite the highs and the lows of the bull or bear candles, and then we see if we have zigzagging structure or not. Just go and watch it. It is pretty interesting. Hope you'll like it. Okay, so price is most likely bouncing only one time violating, 2 times bouncing. It is already 66% if we do not count the consolidation period. How can you profit of that? You can profit of that easily. You just buy whatever support and sell whatever resistance. That's it. So for example, in this example we are going to buy this support level. You should know that this resistance was something that triggered the sales of the market, and that selling was active until we hit this level. So this is the period of selling level. This is the zone of selling. This is the period of opposite price action if we compare it with previous. So if you are looking for buy, so it will be this zone, not exactly this level, but this zone, because this was the period when the market was going opposite. So somewhere within this zone the market will go opposite. Means that it will go opposite than it is going right now. It goes deep. So somewhere within this zone. So what will signal you that you were wrong, where you need to put your stop loss? Just below the previous lows, like that. Boom. Because if the market violates these lows, like that, it is obviously, we have a lower low and lower close below this zone. It is obviously that we violated this support zone. We violated these lows, and we do not have an uptrend anymore, and so on and so forth. So the structure was broken, the structure of the market. Let me use Akil Stokes' words, Jason Stapleton words. Structure. Why not? Let us call it structure. Okay, this is a support zone. So the same with resistance. It is not the only level, so it is very silly to put stops here. What is it? It is, I don't know, maybe only if you go to lower time frames you see a double top or something like that, and you place your stop just below the previous low to the left on your lower time frame, but it should look the same. Just imagine it is 5-minute time frame. You have that low, you have this high, and this low should be a higher low. If it is not a higher low, if it is a lower low, then the structure is broken. You need to get out. Okay, let me just enumerate what we have discussed about the features of this level. Price will most likely bounce off this level. When support is broken and then price goes to retest, it most likely will become a resistance. Broken support turns into resistance, I mean that. The longer was a pullback, if it had a zigzagging structure, the stronger was the level. So if price didn't bounce deep enough from this level, then the level didn't trigger many sales or buying orders, so nobody believed that this level is of any significance. Okay, it is number 3, and number 4, you need to think of support and resistance not just as exact lines, but more like zones. This is number 4. Okay, let's go to our charts, find some support, find some resistance, and see, choose what or which of these resistance is valid and which one. Oh, and of course, the market has a short memory, so the resistance is stronger if it is the most recent resistance. The older is the resistance, it means usually it means that it is less and less has less and less impact. The most recent resistance is the strongest. And support, of course, the level, the resistance of support, the level of resistance, the level of support. Okay, let me go into the markets. What is it? We need to go here. Okay. When I first analyze my market, I do my general analysis. It is my first impression. What is my first impression? Just look at this chart, guys, and say either we have a bullish trend or we have a bearish trend. It is very easy. If the price is moving from your left top to your down right, it is a downtrend. If it is opposite, from your left bottom to right up, it means uptrend. So generally we have that tendency of moving to the downside. So what tendency means? It means that the price will continue moving in this direction again and again and again until it shows us the signs of reversal. And if you would like to know what I understand by this terminology, the sign of reversal, then you should go and watch my video which is called price action reading. Hope you enjoy it also. Okay, this is the downtrend. As I told you, downtrend is a series of lower lows, lower highs, followed again and again and again. Let us draw some line. First, let me draw it the way I draw it. Boom. This is the first line. Boom. This is the second. Sorry. Boom. This is the third. Boom. This is 4, 5, 6, and 7. So I marked you the turning points that I think to be major turning points, and I will explain it to you in a second. First of all, as I told you, the resistance, the support, we are moving to the downside. Let us talk about support. The support is reliable if we have a good pullback to the upside and if we have a zigzagging movement inside that pullback. Okay, look at this here. We'll move to the upside, move to the downside, move to the upside. Is it a zigzag? Yes. Do we have a zigzag here? Boom to boom. Only one candle, bullish, and next. Do we have a zigzag here? Boom to boom. Only one candle. That's why I ignored these movements. If you still do not understand what I'm talking about, re-watch my video that is called Swing Identification Technique. So this is zigzagging. That means that the level is strong enough. This is a zigzagging 2. Boom. So if you draw the zone of that, you will see we bounced off this level, we bounced again, and then we broke that. Then we broke to the downside. Okay, quite the same picture is here. This is a zigzagging level. Boom, to the downside. Boom. This is a zigzagging level 2. Boom. Some candles, highs, boom. And this is a zigzagging candles 2 formation. We had a gap here. So we do not have a zigzagging formation here. Just look at this levels. Boom and boom to the upside. So this is not a valid structure correction for me. So that's not a good turning point. Okay, so look at this. We bounced off that, boom, bounced once again of this level. Let me mark it with a horizontal line like this. And the lowest close, maybe this, the most recent one, and the lowest low. So this is the zone where price action will most likely change its direction, and it changed direction once, two, it violated that because of lower low and lower close to previous. It changed its direction once again, then it went for continuation, and now price came to test this support level once again. I call it support level yet because it didn't prove to be a resistance. If it goes to the downside and price is bouncing from that level, boom, like this, then I say, yeah, it was a resistance. But if it is not bouncing, if it is violating, so the support stays support, and resistance, it never proves to become resistance. So the saying says that broken support now should turn into a resistance. Okay, so what will signify you that the uptrend is finished, then this structure of this higher highs and higher lows is violated? If the prices goes higher of this high, you see that this is lower high, lower high, lower high, and this should also become a lower high because we have a tendency. Price will most likely move in this direction. Okay, after we have defined this direction, we define the bias. We want to be bearish, we don't want to go counter trend. We're sitting at that broken support level that now should turn into resistance, and you know that price will most likely bounce off this level, then to break it. You see on your history 3 times bouncing, only 1 breaking. So there are very good probabilities of this price bouncing of this level once again. So as I'm not a structured trader, I'm not putting my aggressive orders this way. For me to enter into a trade, I need to go to lower time frames to see some confirmation signs, to see some pattern formations that will trigger my entry. And my pattern formations are very simple. It is the pattern that I call unified Gartley pattern. It is, sorry, it is looking this way of the structure. Many of you have seen the Gartley pattern, many of you have seen BAT pattern. So the unified pattern is the pattern that unites the features of both. It was my idea to unite them because my research shows there is no need to separate between these two patterns if you have the understanding of the structure movement of support resistance levels. Maybe it has some importance when you ignore these swing legs, when you ignore the structure of the market. Maybe it has some reason to differentiate between these two patterns. But when you are trading these as a part of my strategy, there is no reason to separate between them. So this is not a harmonic approach, it is mostly the structural approach. This is either not an advanced formation approach because the ratios of that are not coinciding with those ratios of advanced pattern formations. Okay, and the second pattern that I'm using is a cipher pattern. The cipher pattern is here. I give all the credits to Trade Empowered. This team invented this pattern especially very big thanks to the inventor of this pattern, the Darren Oglesby, and to Jason Stapleton and Nikhil Stokes, who so generously presented this pattern to the community of traders, and now everybody can go to the channels, find these patterns, know the rules. They are explaining it free in the videos, and you can benefit of that. Of course, if you will test it, first need to test it. Just do not rely on somebody's words. You need to test it first. Okay, so what I have today for you, this is my structural analysis. We know that we have it here. And this is, although it is not a valid correction for me, I cannot ignore that because the movement is pretty prominent. And as you see, it is touching the previous, what was it? Support, previous support. Now it was touching. So on a lower time frame, we will see a kind of pattern. Let me draw the pattern on the daily, like that. Boom, boom, and boom. So this pattern is called the cipher pattern to enter short. And let me switch to 4-hour chart to show you how this pattern is looking exactly. So you see this correction. Boom. This is the impulse leg violating the previous lows, impulse leg. B point is correction of that, just matching the highs and lows. C point is here. Okay, and the point is, what was it? 786. I already in this trade. So this is a valid cipher pattern. There is a very good probabilities of price to go lower, lower, lower and lower. The usual targets of that is C to D, 382 to 618. I mean primary and the secondary. My targets are a bit different. I will show you in a minute. So what is my target? My entry is X to C, 786, oh no, sorry, just that. 786 was my entry. Here it is. What is my target? My target is very strange, but it proved its efficiency in my research. The lowest close to the entry point, and I have 618. One entry, one exit is my target and is my stop. Stop loss exactly X, not above, not above, no 1 pip, no 10 pips, nothing. My testing shows that it should be exactly X. Stop loss exactly X. The target is 618 from the lowest close to the entry point. I'm not stretching it to the factual D point, that is the completion, the turning point. I am stretching it from my theoretical entry, and if price goes deeper and the actual turning point is somewhere higher, then I don't care. I just trade it this way. Okay, this is the cipher pattern. Hope you enjoyed this opportunity for the next week. If you enter it on market, maybe you will have some good better risk to reward ratio. But of course we may have a kind of gap, and so it opens somewhere at my stop loss or even higher than my stop loss, or we may have a gap to the downside and the market opens in profits for me. So it doesn't really matter. I think that's it for today. I have explained everything what I wanted to say. watch the videos that I recommended you to watch today, and also subscribe to my channel. I am usually posting these videos once a week. Okay guys, hope you place some likes, you will share this video with everybody. If you find it useful, do me a favor. That will be a good support for me, and I really appreciate this. So see you next week. Take care.